Have you ever noticed that Bitcoiners get treated like the conspiracy theorists of finance? You can say that, but lately the difference between a conspiracy theorist and a regular guy is about 6 months. That's about how long it takes for us to be proven right. Aww. Bitcoiners love to say, "I told you so." And it's not for nothing. We have a great rap sheet. But what if I told you that there's one story concerning the price of Bitcoin that breaks down why this era of Bitcoin is shaking even the most diehard of Bitcoiners' hands? And why this cycle is changing everything. I'm Oceans. This is Beyond Bitcoin. Let's go. Let's start with the part that nobody wants to talk about. This year, Bitcoin's price has been in decline, going from 100K to 125K, and then now around 90K. Year to date, Bitcoin's price has been in negative, and no one has been able to understand why. But that may all have changed this week with a story that mainstream media is keeping buried. Jane Street, one of the most sophisticated trading firms on the planet that manages approximately 140 billion in total assets, was accused of timing big sell-offs to the tune of 2.5 billion in BlackRock's IBIT ETF at the exact moment the US markets opened. It's not random. It's not organic. That was timed. And normally when someone like MicroStrategy buys hundreds of millions in Bitcoin, the market jumps. But this time, after the announcement, Bitcoin dropped. Nothing about that is normal.
On September 12th, Jamie Dimon says Bitcoin is a fraud. He says he'll fire any one of his traders buying Bitcoin. Bitcoin drops 24%. When Jamie Dimon speaks, people listen. So that weekend, we found out that the largest buyer of a Bitcoin fund that's in Europe that buys physical Bitcoin, right? The largest buyer was Morgan Stanley and JP Morgan. And that's not illegal.
He says it's a fraud.
It says you fire anyone that buys it. Yes.
And at the same time, his company is buying it.
His company is buying it.
It's just, so unethical.
And it wasn't just that one event. A few days earlier, Bitcoin jumped to around 94K, only to instantly reverse into a liquidation cascade. Analysts called it a liquidity hunt. In simple terms, it's a giant player pushing the price up, which triggers over-leveraged longs and harvests liquidity, and then they slam the price back down again. Imagine forcing half the people in a casino to bet big and then controlling the next roll of the dice. That's the allegation. Now, mix market manipulation, alleged or not, with macro conditions that are already fragile. Stocks sold off, inflation prints came in hot, bond yields jumped. Bitcoin, like every other risk asset, got punched in the face. And when nearly $1 billion in leveraged crypto positions were wiped out in a single day, it created a feedback loop of forced selling. So now you've got flash crashes, you've got whale games, you've got macro panic and cascading liquidations all hitting at once. No wonder even seasoned Bitcoiners felt the ground shift. And here's the part that people are missing. Some of the biggest corporate Bitcoin holders have suddenly had their valuations slashed. Not because they sold, but because Bitcoin didn't react the way that markets expected. Even Standard Chartered, one of the world's largest banks, the same bank that called for 200K Bitcoin, they halved their target recently. And if you've been around long enough in this game, then you know that institutions don't warn the public before they make their moves. They rotate quietly, they hedge quietly, they accumulate quietly, and they de-risk quietly.
People are realizing that the stock market is rigged. We saw it with GME, we saw it with AMC, and they don't want to play that game anymore. So they're naturally starting to go to other games that hold the actual same level of risk, like crypto. It's the same level of risk. You just have to be investing into the right things. I could take you to a section of the stock market, which is called the penny stock market, and they're $25, $30 million market cap companies, less than a fucking meme coin. So is that a little office in the middle of some strip mall that has one customer that pays them 20 mil a year, and now your company's valued at 40, and it's some shell company, and you just pump and dump through that? Dude, the entire game is a scam.
So is this manipulation? Is this macro? A liquidity hunt? Is it a structural reshuffling of big players? The correct answer is yes. It's all of that. And that's why this cycle is different.
In July of 2025, there was a single move by JP Morgan's prime brokerage division. They raised the margin requirements on strategy from 50% to 95%. Now, to put that in plain English, if you wanted to buy, let's say, $100,000 of MSTR, the stock, you'd have to put up $95,000 of cash. You could barely borrow. So what that did is it suffocated leverage. Now, they did it right before Strategy announced their $835 million Bitcoin purchase, which was its largest in 4 months. So then you have all these like hedge funds who were long MSTR as a Bitcoin proxy, all of a sudden were forced to unwind their positions. Now, what do you think happened? Well, unwinding, selling. So then selling pressure hit immediately. And then, of course, the price of MSTR collapsed immediately. Now, this wasn't just a system-wide adjustment here. JP Morgan didn't do this to other stocks like Tesla, Nvidia, Coinbase, didn't do it to other high volatility stocks. They only targeted MSTR, right? And then, of course, then came the synthetic counterstrike. So on November 25th of this year, JP Morgan filed with the SEC for a leveraged Bitcoin-linked structured note tied to BlackRock's ETF, the IBIT ETF. Now, these things, they're the perfect example of how Wall Street uses this old playbook. So investors pay $1,000 per note. If IBIT is above a preset level in December of 2026, then JP Morgan can call the note back and pay you $160. That means you would lose 84% of your money. If it goes to maturity in 2028, you'll get 1.5 times upside on Bitcoin. But if it drops 40%, you lose most or maybe all of your principal. So what this does, it gives you the illusion of Bitcoin exposure, but really what JP Morgan is doing is they never buy any Bitcoin. So there's no supply removed, no collaterals created, there's no scarcity loop that's being formed. It's synthetic shadow.
For the first time ever, Bitcoin is in a world where hedge funds are playing their games at the same time that trading firms are moving markets, at the same time that governments are accumulating in secret, at the same time that banks are revising target mid-cycle, and retail is getting squeezed from both ends. You are no longer competing with hobbyists. You are competing with institutions who are very good at shaking weak hands. So here's your warning. Before Bitcoin takes off again, if you don't understand the forces acting on the price right now, if you don't understand how these players move, if you don't understand how volatility gets manufactured, then you're going to panic sell at the bottom. You're going to miss the recovery and then convince yourself Bitcoin is dead right before it rips. This isn't meant to scare you. This is meant to prepare you, because markets like this don't last long. And when they break fast.
And after this complete breakfast, including my vitamin pack Frosted Flakes, they bring out the tiger in you.
Break fast. Whether this is manipulation, macro pressure, or just Bitcoin being Bitcoin, this cycle is separating tourists from the students. And the people who understand what's really happening, they're not leaving, they're positioning. Consider this your last warning before the next big move.
Yes, Bitcoin's price has been manipulated a lot for a long time. But here's the key. The manipulation is not a verdict on Bitcoin. It's proof of how valuable Bitcoin is and how hostile the environment has been while it monetized anyway. The parasites didn't swarm some random useless token. They swarmed the hardest asset on Earth and tried to hijack the rails around it. Exchanges, whales, stablecoin printers, derivatives casinos, market makers running literal manipulation as a service. From 2009 to now, if you overlay on-chain data, regulatory settlements, and academic work, you don't see a clean fairy tale free market. You see something much more important. You see Bitcoin subjected to maximum abuse by corrupt intermediaries and surviving all of it without changing its rules one time.
Thank you so much for watching this video. If you like what you see and you want to see more, make sure you hit that like button below. Or you could subscribe to the Simply Bitcoin channel for more content like this. We're coming out with it every single day of the week. Also, don't forget to hit that notification bell. I'm Oceans. This is Beyond Bitcoin. Until next time.